President Trump's biggest challenge may also not be the other candidates or even impeachment, but the state of the economy. While the S&P 500 gained during Trump's first year in office, the performance hasn't been record-setting. He trails Franklin Roosevelt, Harry Truman, John Kennedy, and George Bush Sr. over the same time period. So how will the economy continue to fare during the election year, and what does it mean for the outcome of the presidential vote? Well, we're back with Lucy Macdonald of Allianz Global Investors and Rick Lacaille of State Street Global Advisors. Now, there are a million angles actually in dealing with this. Rick, one of them could be that the president will do everything he can to get closer to China because he needs a strong economy, and that's the one thing that he can actually has a lever on.
Well, certainly to get re-elected, it's helpful if you've got a strong economy and that you deliver on the promises you made to the electorate first time round. So building the wall, dealing with China. There are things he can't do because he was never empowered to do them. But if you can deliver on some of those, that at least gives him a good starting point.
But what does that mean, Lucy, for either, I guess, continuing to attack the Fed, because President Trump really thinks that that makes a difference to the economy, or does it mean that he wants to deal with China as he gets closer to the election?
Both of those things. I mean, the pressure on the Fed is likely to remain. So this pause that they're on now, that pressure is likely to rise again, and we're likely to see more of that background noise. And then, as we said, with trade, the central expectation was that the political pressure on both sides would lead to some sort of agreement, and that's what we are likely to see. Now, underlying that, we are seeing deceleration in growth. It's stable, but there certainly has been an impact from trade, which will not necessarily come straight back on because a lot of it is indirect impact. It's confidence, and that's why the capex has been pulled back.
Yeah. Rick, one of my favorite stories on the Bloomberg of the year was talking about presidential elections and how people call them every year and they get the trade wrong every year, that they basically call for a meltdown. I'm wondering, are you planning to trade at all around the election? Does it matter at all to your investment thesis?
Well, it matters a lot, but it may not mean we're going to trade around it. I mean, we have no special insight into what's going to happen. And I think as 2020 begins to unfold and you've got the Democratic nomination solidified, that could result in some pretty significant swings. So the question will be, do we want to take much risk on big over-underweight positions in the US, or should we preserve our firepower for things that we can understand a little bit better? And I think the latter will be the case. If you just think about the possibility of Democratic nominations, some of the candidates could have a very meaningful impact on the private equity industry, for example, which would spill back into public equities as well. So I think that we're setting ourselves up for a fair amount of volatility in 2020, which may not be rewarded.